Nkosana from Lucy Drift Secondary School. Welcome to the Eastern Cape Department of Education broadcast studio. Today's lesson will be on capital, which is in paper 2 of Agricultural Sciences in grade 12. All right. On capital, we'll be focusing on different financial records that are used by farm businesses. Then the first financial records we'll be looking at includes the income statement, the balance sheet, the cash flow statement, the enterprise budget, and the whole farm budget. Then we'll first look into the income statement. And remember, the income statement is a financial record that summarizes the income and expenditure of a farm business. For example, the income for this income statement, under income we have the beef sales. Beef was sold for 85,000 rand. Dry beans were sold for 15,000 rand. Maize sales for 34,050 rands. Then came with a total of 134,050 rands. Then we have an expenditure. Expenditure is the money that was used to buy these items or to pay for these items, with a total of 112,726 rands. Then income statement also helps us to determine or to know whether the farm business is running at a profit or it is running at a loss. And then we have a question 1.1 here. Our question: determine the profit or loss of the farming business with the income statement above. Show all calculations. When we are determining the profit or loss, we have a formula that we use. The formula is profit or loss is equal to a total income, but as Elena, you need to write it in full. It's because of space. Total income minus total expenditure. So we have the total income in this income statement. Our total income is 134,050 rands minus the total expenditure, 112,726. Then let's calculate. 134,000 minus 134,050 rand minus 112,726 gives us 21,324 rands. This is our answer, and this is a profit. So there is a profit. The profitability, comment on the profitability of the farm business. There is a profit because the total income is more than the total expenditure. If the total income was less than the total expenditure, we'll have the negative answer here, meaning the farm will be running at a loss. So even if it is negative, the answer might be correct. Do not change the formula if you see that your answer is negative. It might be correct. That would mean the farm is running at a loss. So that is our calculation, meaning we have determined the profit or loss. There is a profit. The farm business is running at a profit. The second question, 1.2, identify the examples of the overhead costs from the income statement. The fixed costs, the variable costs from this income statement. Then when we are determining or identifying these costs, we look into the expenditure, under the expenditure, not under the income. So under the expenditure, we have different costs here. For example, let's start with the overhead costs. Overhead costs are general costs. These are the costs that are not directly related to any specific type of a business. They can be incurred by any type of a business. For example, the repairs. Repairs can be paid by any type of a business. The farm business have repair costs. the supermarkets, the taxi industry, all those businesses have their repair costs. The insurance fees and license fees are also paid by different types of business. They are not only related to a specific type of an enterprise or a farm business. So the rent, for example, the telephone bills, all those are the overhead costs because they are the general costs. And then but if, for example, we're talking about the seeds and seedlings, they are not the overhead costs. If we're talking about the livestock purchased, the fertilizer and lime, the herbicides and pesticides, they are not the overhead costs because they are directly linked with the farming business. So those are the overhead costs. Number two, we have the fixed costs. Fixed costs are costs that do not change with the change in production. So even if the production increases or decreases, the fixed costs do not change. They stay the same for a certain period of time. So those are the fixed costs. For example, the fixed costs in this income statement, we have the fixed costs. The fixed costs, for example, insurance and license fees, they do not change when the production changes. We also have the rent. It doesn't change when the production changes. So even if the production increases, the production decreases, these type of costs do not change. So those are the fixed costs. But the ones that change with change in production are the variable costs. For example, the fertilizer and lime. The fertilizer in lime will change as the production changes. The herbicides and pesticides that are bought, they will change as the production changes. Water uses, water bills will change as the production changes. So those are the types of costs that we have identified from the income statement. So that is an income statement. It is a summary of income and expenditure of a farm business. Let's continue. The second financial record that we're going to talk about is the cash flow statement. The cash flow statement has a summary of, it has the receipts, it has the payment, and most importantly, it has the opening balance and the closing balance, right? Okay, now let's look into this cash flow statement. We have a certain period of time that is from January to April. So let's look into January first. In January, we have the cash flow summary down there. We have the income, we have an expenditure. This is the total income for January. This is the total expenditure for January. And then let's go into the cash flow summary. We have an opening balance. 10,000 is an opening balance for this farming business. For example, this 10,000, maybe it is a capital that comes from savings, that comes from production, can be an inheritance or grant, it can even be a loan. So they have an opening balance of 10,000. And then the total income for January is 2,000 rand. Here is 2,000 rand from the animal manure, that is the fertilizer sales. We also have the total expenditure. This is the total expenditure, total expenses, that is 4,800 from the operating expenses and the hired transport. So then we calculate the profit or loss. We use the same formula that we were using in the income statement. Total income minus total expenditure. Then in this case, it gives us a negative answer, meaning there was a loss in January, because it's 2,000 rands minus 4,800 rand, which gives us 2,800. Then we have the loss, that is the negative 2,800, meaning there's a loss in the farming business in January. We have the closing balance. To calculate the closing balance, we have a formula that we use. But this formula, it depends on the net income, whether there's a profit or there's a loss. So closing balance is equal to opening balance plus profit if there's a profit, but minus loss if there was a loss. For example, in January, we have a loss. And then when we're calculating, there's an opening balance. Our opening balance for January is 10,000 rand. Then we have a loss, meaning we will do the subtraction. opening balance, that is 10,000 minus the loss. The loss is negative 2,000. So minus 2,800 rands. It gives us an answer of 7,200 rand. That is a closing balance for January. A closing balance for January becomes an opening balance for February. So in February, that 7,200 rand is now the opening balance. Then again in February, we have the total income. The total income for February is 10,000 rand. 8,000 from capital sales, 2,000 from fertilizer sales, so it gives us 10,000 rand. Then the total expenditure for February is 6,000, 4,000 rand from operating costs and also 2,000 from the hired transport. It gives us 6,000 rand. Right, let's go to the profit or loss. 10,000 rand total income, 6,000 rand total expenses. Then 10,000 rand minus 6,000 is 4,000. So there's a loss in, sorry, there's a profit in February. Then let's calculate the closing balance again. Opening balance, our opening balance for February is 7,200 rand. Remember the formula: if there's a loss, we subtract; if there's a profit, we add. Now we're adding because we have a profit. So it's 7,200 rand plus 4,000, which gives us 11,200. That is a closing balance for February. But the question here is that we are going to determine the part A, the closing balance for March. But let's continue to March. That 11,200, which was the closing balance for February, is now the opening balance for March. So 11,200, but for March there was a total income of 25,000 rand. There was a total expenditure of 23,000 rand. So we also go to the calculation of the net income. 25,000 rands minus 23,000 rands gives us a total of 2,000 rands. Now, we have to calculate. We have to calculate the closing balance. Remember the formula for the closing balance, the opening balance. The opening balance is 11,200. We have a profit, meaning we are adding 2,000 plus 2,000 rand. So in March, we have an opening balance of 11,200. We have a total income of 25,000. We have a total expenditure of 23,000 rand. Then subtracting 23,000 from 25,000, it gives us the total of 2,000 rands. Then now we need to calculate the closing balance. The closing balance is equal to opening balance plus profit if there's a profit, minus loss if there is a loss. So in this case we have a profit. So opening balance plus profit. Then the opening balance was 11,200 plus 2,000 rands. 2,000 rands. It gives us 13,200 rands. This is our closing balance for March. 13,200 rands, right? Then now we are going to April. April, the opening balance is 13,200. The total income is 33,000. The total expenditure is 5,500 rands. Then now we need to determine the profit or loss of the farm business. We're calculating the profit or loss again. Remember the formula? I said when we're calculating the profit or loss, we have our formula that we use, which is profit or loss equals to total income minus total expenditure, but write it in full as a learner. Then the total income for April is 33,000 minus the total expenditure for April, 5,500. Let's calculate. Let's calculate 33,000 minus 5,500 gives us a total of 27,500. There is a profit. There is a profit. So it's 27,500, right? Let's confirm whether the closing balance is correct. So we'll say 27,500 plus the opening balance, which is 13,200. It's 40,700, meaning it is correct. So that is the cash flow statement. In the cash flow statement, we have the receipts, we have the payments or income and expenditure, but most importantly, to identify the cash flow statement, just know that there's an opening balance and the closing balance. Let's move to another financial record, which is the balance sheet. The balance sheet is a bit different from the ones we're talking about. We have now the assets and liabilities. Assets and the liabilities. Under the assets, we have the machinery worth. We also have the value of land, which is 500,000 rand. So the total assets for this business is 550,000 rands. The liabilities of the farm business, the bank overdraft is 2,000 rands. The loan is 12,000 rands. The total liabilities of the business, 14,000 rands, right? Okay, that is a balance sheet. Now we have the questions 1.1, calculate the net worth of the business. You are not calculating the net income or profit or loss. That is the net worth, not the network. The net worth equals to total assets. Total assets minus total liabilities. Do not change the formula. Liabilities. So the total assets is 550,000 minus 14,000 rands. Let's calculate the net worth. Let's calculate, it's 550,000 minus 14,000 rand equals to 41,000 rands. Again, 550,000, sorry, 550,000, 536 is 536,000. That is our answer. The net worth of the farm business is 536,000. Then the following questions comment on the viability of the business. The farm business is viable. Why do we say it is viable? Because the total assets are more than the total liabilities. But if the total assets were less than the total liabilities, the farm business will be not be viable because we'll have a negative answer as our net worth. And then the third question, state two types of capital shown in the balance sheet above. Remember, we have three types of capital. We have the fixed capital, we have the movable capital, and also we have the working or floating or production capital. But the examples of capital that you can see under this balance sheet is that we have the machinery, and machinery falls under the movable capital. So we have machinery, that is number two. We have a machinery, which is the movable capital. We also have land. We have land. Land is the fixed capital. From this balance sheet, the examples that we have is the machinery and land. Land is the fixed capital. And we also have the types of credit that we use or that are invested in these types of capital. For example, the type of capital that we invest, the type of credit that we invest in land is the long-term credit. And then the one that we invest on machinery is the medium-term credit. But the one that we invest on the working capital is the short-term credit. That is our balance sheet. Another question. Name the document that is used to record farm assets. We record farm assets in a document that is called an inventory. In a document that is called an inventory. That's where we record inventory. We record all farm assets in a document that is called an inventory. Now, let's move to another farm record. This one is an enterprise budget. We have two types of budgets, the whole farm budget and the enterprise budget. The enterprise budget involves operations of a single enterprise. For example, it can be an enterprise budget for a broiler production, for maize production, for rose flower production, for dairy production, any type of production, but it focuses on a single enterprise. For example, let's look at our enterprise budget. We have the estimated returns or estimated expenditure or cost. It can be expected returns or expected expenditure. And then we have the broiler sales, meaning broilers were sold for 50,000 rands. Fertilizer sales, fertilizer that is manure from those broilers was sold for 20,000 rands. Those were the returns that made a total of 70,000 rands. And then we also have the cost. Water, it was 10,300 rands. Water for these broilers. We have the feed. Feed for the broilers was 12,000 rands, 345 rand. And then we also have the labor workers on the farm. Then they were paid 14,500 rands. Then we have electricity for those broilers. It was 3,308 rands. We have the medication for these broilers still. So it is 8,800 with a total of 49,253. So all these costs are directed or include or are for these broilers. So this is an enterprise budget. Let's calculate whether there's a profit or loss. Or let's say the net income. The net income equals to total income, total returns. Total income minus total expenditure. Total expenditure, that is total returns minus total costs. So the total returns, it's 70,000 rands. The total costs, it's 49,253 rands. Let's calculate our answer. Let's calculate our answer. We have 70,000 rands minus 49,253 rands, which gives us an answer of 20,000. There is a profit. It is running at a profit. 20,747 rands. That is meaning there's a profit in this farming business. So that is an enterprise budget. Those are the financial records that are used by the farming business. We have now come to the end of our presentation, and we will continue with another topic on the next presentation. All right, as I have said, this is paper 2 in grade 12 of agricultural sciences, This topic usually appears in question 3, and then mostly it has calculations on the capital. You need to remember the calculations, you need to remember the formula, and remember, do not change the profit or loss formula. Total income minus total assets. Remember the types of capital. Remember also the credits that we have talked about, the 3 types of credits: long-term, medium-term, and short-term credits. So the calculations mostly in this topic, and the concepts, you need to know those concepts. The capital, the assets, for example, that is a concept in itself. So you need to know the concepts, you need to know the calculation, you need to be able to differentiate between the financial records that we have just stated, because the question might come with an income statement and says identify the financial record above. So you need to be able to differentiate between those or amongst these financial records that we have done. And now we have come to the end of our lesson. You can leave your questions on the comment section. Don't forget to leave the name of your school so we give shout outs. Please share, recommend, and also subscribe to our YouTube channel. Thank you for watching. See you on our next lesson.